Hey everyone, Tarek Backus here with Whole Net Worth, and in today's video, I'm going to be talking about the 5 companies that I'm looking at investing in during this COVID-19 crisis. Lockdown, self-isolation, whatever you want to call it, there's a couple companies that I'm looking at investing in. There's a couple companies that I have on this list and that I'm looking at possibly to add to my position. Now, I'm going to be looking at it mostly from the aspect of their balance sheet. And the reason why is because I think that having a strong balance sheet, cash to debt position during this time is one of the best things you can have as a company, just because we are on lockdown. Most people are at home. Most people are not able to go out, and most businesses are not able to open to the public to sell. So what they're going to need is to have a lot of cash on hand to cover and carry their costs and expenses during this time. And that's one of the reasons why I'm looking at these companies. Now, the other thing is I'm not factoring in or making any assumptions on their future projections for their sales. So I haven't looked at that yet, but the companies that I'm looking at and that I will talk about in this video generally have some sort of reoccurring sale that you wouldn't have to be too concerned about. So I'm going to get into the video. I'm going to talk about the companies. These are what I'm thinking about investing in and the reasons why. So the first company is Apple. I hold Apple already. Apple is actually one of my largest holdings. I have about 20% of my portfolio in Apple. And one of the reasons why I love Apple and I like Apple for the COVID-19 crisis is this. So as of today, what is the date today? Today is May 9th. Apple's trading at $310. That is 24 times price to earnings ratio, and they do give a dividend at about 1% based on the $310 valuation. Now, if I'm going to go to a couple key statistics, I'm going to look here at the first thing I want to look at when I scroll down. I'm on Yahoo Finance, by the way. Their app is really good. I want to look quickly at their net income. The net income that they had over the last 12 months is about $57 billion. I like that number. That's pretty good. And then I'm looking basically at the balance sheet, and I'm looking at their cash to debt position. Now, on Yahoo Finance, it says that they have about $94 billion in cash and that their debt is about $116 billion. I also know that I don't think Yahoo factors in there's another $100 billion that Apple has. And to be honest with you, I'm trying to figure out where I can find this information correctly. But I know that technically right now, Apple has about $200 billion in cash, and they have about $115 billion in debt. So this means a net position of a plus $100 billion. This is why I like this, because annually they're bringing in, let's say what they have here, about 55 or like between 55 to $60 billion in revenue. Now let's say that revenue drops off completely 100%. They still have $100 billion of cash to fall back on. And Apple is still going to make money, based on certain sales. Yes, their sales have dropped, but as this COVID-19 starts, the self-isolation and the quarantine starts to relax a bit and people start to get out and start to spend their money more, there will be this upgrade cycle of people having to upgrade their phones later in the year. I myself personally still have an iPhone 6s, and I'm planning to upgrade later this year once they release, and hopefully they release their phones with 5G. So having said that, I like Apple for that reason, just because of their balance sheet. It's very strong and it allows them to weather the storm for this. And that's the reason why I like these companies that I'm talking about. They have very strong balance sheets and they can weather the storm. The reality is we don't know how long this thing is going to last, and we don't know how companies are going to be affected. It's still too early. I think the stock market is high. There's a lot of printed money that's being put into the market, and I would like to see this play out because I want to see how this affects businesses down the road. And I want to see if they're able to get back to where they were pre-COVID in terms of making the amount of sales and revenue. But the companies that I'm going to list here generally might have reoccurring sales. So for instance, Apple, if you have an older phone, yes, you may tend to hold on to it longer, but when it becomes too old to the point where you need to upgrade, you're going to upgrade in that cycle. And Apple is still selling, MacBooks, and also don't forget their services side of the business. So they are still doing that as well. So keep that in mind. Now, the next company that I have on the list here is Microsoft. Now, Microsoft I like during this time because a lot of companies have switched to using Microsoft online in terms of Teams, Skype for business. So they're using the Microsoft services. On top of that, Microsoft has moved recently from a one-time purchase license fee to now a yearly licensing fee for their Office software system. So, if you're a company and you're a business, you're going to be using Microsoft for this regularly. And so that would keep their revenues, reoccurring. The other thing with Microsoft is they are giving Amazon Web Services a run for their money in terms of, I think it's Microsoft Azure, for cloud computing services. More companies are moving to cloud computing in terms of storing data and their files, and Microsoft is becoming a bigger player in that business. So that's one thing I like where Microsoft is moving into the future. And this is where I see Microsoft kind of benefiting from this COVID-19 situation. So in terms of, them losing business or keeping business, I think they're going to be more on the side of keeping business, probably even gaining business through this COVID-19 situation as more and more companies move online and have to do more business online as more employees start to work from home. So I'm going to run through the numbers right now. So right now, Microsoft is trading at about $184 per share. And that PE for them is at 30. I think that's a little bit high, but considering the situation, I think it's okay. Now, if you look at their revenue over the last 12 months, their net income is about $46 billion, which is great. Their total cash position is $137 billion, and their debt is $84 billion. I like this. They have more cash than debt. And on top of that, I have a sense or a feeling that they're still going to be bringing in money because people are still paying their licensing fees for their services. So I don't see their $46 billion dropping that drastically. This is one of the reasons why I think Microsoft may be a good company to invest. Now, the next one is Alphabet, Google. I have them in my portfolio. They're a small position. They're about 1%. But the same thing is it's a software company. They tend to have, sponsored ads on YouTube. They're getting paid advertisements through Google AdSense and, their software services. The ticker symbol is Goog. The company's Alphabet, and it's trading at $13.88 a share right now, and that is a PE ratio of 28, so that's pretty good. It doesn't give a dividend, which I don't like. And sorry, Microsoft did give a dividend, so I'll post it up here somewhere. But Google doesn't give a dividend right now. So net income is $34 billion over the last 12 months. It's been $34 billion. Their cash position is $117 billion, and their debt is only $16 billion. This is all according to Yahoo Finance. So this is fantastic. This means they have $100 billion of cash that they're just sitting on. And I like this because, if revenue drops, sales drops, they have cash there to keep them afloat. The other thing is it's a software company. With these companies that I'm all listing here, they have very little overhead. So I think this is the reason why they can stack up the cash. So it's great. I love these companies for that. And I like Google in this position. The next company that I'm looking at is Intel. I don't have Intel in my portfolio, but I'm considering that. So Intel Corporation is trading right now at $59.67 a share. That represents a PE ratio of 11.57. So that is a really low PE ratio, which is really good because, well, I shouldn't say really good. It depends. It's good in the sense that, you can get your money back in a shorter period of time if you understand PE ratios. Lower a little bit better in terms of the sooner you get your money back based on their current sales. Net income is $22 billion. Their cash position is $20 billion. And their total debt is $39 billion. Okay, so this is one company where their debt is more than their cash position, but it's not by that much. And they're also bringing in around $22 billion. They're not as good as the other companies in terms of balance sheet, but I think they're still in a good position for what they provide. Now, they do provide chips, so they're not really necessarily a software company. So their sales may be down. However, I do think that sales of hardware devices and chips are still going to be in demand in the future. So this might not be the greatest one out of the 5 that I'm looking at to invest in today, but their cash position is still okay compared to other companies. I mean, their cash to debt position. So I like it for that reason. I also like Intel, based on their business. The only thing is, again, I haven't looked at their sales and their sales forecast based on COVID-19 and how that's going to affect that, $20 billion in net income over the next 12 months. So that's something that I have to look into further, and if you're interested, you would have to look into further. But I still think it's probably a pretty decent company to invest in based on its balance sheet. Now the next company is Facebook. So Facebook, ticker symbol FB, is trading at $212 a share right now. Its PE ratio is 29. No dividend, and I forgot Intel gives a dividend. I'll put that up there somewhere. So Facebook's net income is 20 billion, and I'm just giving you the rough. I'm not putting in the decimals. Facebook's income is 20 billion. Their cash position is 60 billion, and their debt position is 10 billion. And Facebook is pretty much all a software business. Yes, they do have the Oculus headset, and they're getting into that business as well. But Facebook, Instagram, WhatsApp, there's still going to be a lot of business advertising on Instagram. There's still a lot of businesses advertising on Facebook. There's lots of businesses that are run online that are do heavily marketing on Instagram and Facebook. And I don't see that slowing down anytime soon. In fact, I see it increasing with the whole COVID situation. So I think Facebook is in a prime position to benefit from this quarantine and self-isolation. And on top of that, their balance sheet is strong with 60 billion in cash and 10 billion in debt. And on top of that, the only thing is they don't give a dividend. So, your money is not hedged in terms of pricing fluctuation. However, cash position is great, and I think the company is in a great position to benefit from this COVID-19 situation. These are the top 5 companies that I'm looking at right now to invest in. The reasons why is I think it's more of a defensive play than an offensive play. And when I say defensive, it's because they are sitting on a bunch of cash that allows them to weather a storm, this kind of storm. And we still don't know how long it's going to last and how long until we get back to normal and what that normal looks like. And these are the reasons why these 5 companies I'm looking at and that I would recommend during this situation, this crisis. However, you still got to do your own due diligence. Anyways, that's my recommendation. I'm looking at it for myself personally. I haven't invested in all of them. I have 2 positions, and for the other 3 companies I'm currently looking at. Just wanted to share that with you guys. Hope that shed some light. If you do have some money. Oh, the other thing I would say is, right now I would prefer to stock up on cash before I invest in the market. So that's what I'm doing right now. However, if I did have to invest, these are the 5 companies that I would be looking to add positions to. Anyways, I hope that helps. Anyways, that's my advice. I hope it was great. If you liked the video, hit the like, subscribe, and hit the bell notification, and do leave a comment. See you guys in the next video. Take care.